First item of business is bill introductions. Do we have any requests for bill introductions?
Good afternoon, Mr. Chairman, members of the committee. I'm Tara Mays with the Kansas Hospital Association, and I would like to request RS number 2706, which would allow Wilson County to proceed with a ballot initiative of the voters for a sales tax to fund local EMS services critical to area hospitals while ensuring that some of the other hospital revenues remain intact. I'd be happy to stand for questions.
Thank you for that. Committee, any questions?
Sure. Wilson County?
Wilson County, yes. Any further questions? Any objections? Seeing none, the request is approved. Thank you. Any further requests for bill introductions? Yes, sir.
Good afternoon, Mr. Chairman and members of the committee. My name is Michael Ruffin. I'm the Vice President of External and Legislative Affairs for AT&T Kansas, and I'm requesting bill introduction for RS 2597, an act concerning taxation relating to sales and compensating use tax, providing for a refund of tax paid on sales of property used in video, internet access, and telecommunication services.
Thank you, sir. Committee, any questions? Any objection? Yeah. Representative Corbett?
On your refund, is it from all municipalities or just the state, or from who?
Only state.
Thanks.
Any questions? Any further questions? Any objection? Seeing none, the request is approved. Thank you. Any further requests for bill introductions? Seeing none, we will move on to our item of business for the day. We'd like to welcome to committee the Honorable Mark Burghardt, Secretary of Revenue, or Kansas Department of Revenue. Welcome to committee.
Thank you, Mr. Chairman and members of the committee. It's a pleasure to be here today. As I was walking over from the Mills building, I was thinking back to the old days when we were in the docking building and I could take a tunnel over here. That's sorely missed right now. Did want to appear before you and sort of update you on the operations of the Department of Revenue. I know during the course of a legislative session you see a lot of bills come through committee, and I'm hopeful today to give you a little background in terms of how some of those bills might fit into the big picture of state finance. So if you will turn to the organizational chart that's included in my material, I would note that the department has 4 major divisions, and today I'm going to spend virtually all of my time talking about the Division of Taxation. But again, just so you know, we have 4 major divisions within the department, Division of Taxation being one of them. We have a Division of Vehicles, Alcoholic Beverage Control Division, and then our Property Valuation Division. Altogether, the department has FTE positions about 1,050 when we're fully complemented. At this point in time, and I had just looked at the figures from a couple weeks ago, we were down roughly 160 employees at this point in time with retirements and employees just leaving to take other positions. So if you look at the organizational chart, there are a couple of key positions and offices that I want to just briefly mention because they do relate to the tax function. One of those is the Office of Administrative Appeals. You know, when taxpayers receive an assessment from the department or the denial of a refund claim, they have the opportunity to appeal that. And we get between 500 and 1,000 appeals every year, and that's what the Office of Administrative Appeals handles. And those appeals can be somebody who's had their homestead refund adjusted or a multi-million-dollar corporate income tax assessment. So it covers the entire spectrum. So that's one of the important units that, again, is tied to our taxation function. And skipping over then to the information systems, I guess I never realized how critical IT personnel are, especially in a tax agency that has several operating systems that could absolutely not function without this staff. We have 80 IT professionals at the department, and they keep our operating systems running very smoothly. I can't think of a down day in the last 3 years that has happened even during the course of the pandemic, and much of it is attributable to the work of these IT individuals who it is not uncommon for them to work through the night. If we have a deployment in a system that is not working exactly right, these individuals will work through the night to make sure that the next day we have an operating system that is able to process tax returns and payments. And perhaps one of the most important functions that the IT individuals perform is to maintain the security of the tax information that we have in the Department of Revenue. Our State Office of Information Technology, they have a variety of firewalls to protect the information within state agencies' possession. On top of those, the department has in excess of 60 of its own firewalls that it owns to protect not only the tax information, but driver's license information, all the personal information about our Kansas citizens. So we take the protection of that data very, very seriously. In fact, the tax data, we have an exchange agreement with the Internal Revenue Service, and we have in our possession federal tax information, and the IRS criteria for security are extremely strict, and we undergo audits with the IRS to make sure that our systems are secure. And again, our IT staff does an amazing job in making sure that everything that we have in our possession is in fact secure. So I think those are the areas that I want to mention. I guess perhaps one other comment, and a lot of you may know this individual. Within the department, we have a taxpayer advocate, and his name is Bob Cleland. And Bob has a lengthy history with the department, is quite knowledgeable, and my sense is that if you haven't talked to him, you have had constituents that have talked to him. But he is a great resource if you ever have constituents or you personally have questions you want to ask. Mr. Cleland would be a good place to go. Can't say enough good about him. So if you turn to the next page, I guess it's number 2 at the bottom. Just in general, the Department of Revenue, obviously we collect a lot of taxes, but we collect a lot of other receipts as well and fees. And on page 2, it kind of gives you a sense of the amount that we do collect on an annual basis. For example, in fiscal year 2021, we did collect over $12 billion in revenue and processed through the department. Now, a couple things I want to point out. If you look at that table on page 2, you'll see for fiscal year 2021 some pretty significant increases from 2020 to 2021 in individual income taxes, corporate income taxes, and privilege taxes. And I would just make sure that you're aware that a lot of that increase is attributable to the filing extensions that we granted in 2020 during the beginning of the pandemic, that pushed as much as $500 million from one fiscal year into the next fiscal year. So as we go through these other tables, please keep that in the back of your mind, that a lot of this income shifting results in these higher numbers for fiscal year 2021. If you look at page 3, this pie chart that just kind of breaks out where those dollars go to, and you can see that 71% goes to the state general fund and 9.3% to the highway fund. And again, these are the gross receipts that we receive. Over on page 4, again, more information regarding revenues that come into the department. And these figures that you see in this table, these are net of refunds. But again, you can still see the unusual increase in individual income tax, corporate income tax, and privilege tax. One of the things that is noteworthy, and I'll talk about this a little later, sales tax receipts continue to go up, as well as compensating use tax. And when we get into the section dealing with the sales and use tax, I'll give you I think a reasonably good explanation of how our compensating use tax has increased dramatically over the last 4 years, and the reasons why. And I suspect most of you know why, but you'll get to see the numbers that justify those reasons. If you look at page 5 and 6, again, this is really for your own personal information. If you want to look at your particular county that you might represent, it gives you the major tax types and the per capita taxes that might be collected from that county. Not surprisingly, Johnson County is perhaps at the top of the list in terms of a revenue source to the state of Kansas. So, moving over to page 7, the Division of Taxation has roughly 350 employees, and I've laid out the various divisions or various sections within the division. Tax operations is obviously at the top of the list. Our Director of Taxation is Steve Stotts, and many of you know Steve. Steve has been involved in the Revenue Department for many, many years, and has also been involved in the CRE process for many, many years. The next section is customer relation. This is where we have a lot of contact with taxpayers to help them resolve problems and to just provide information. This is one of those public-facing offices, and what we have done, and has been prompted by the pandemic, instead of people coming into the office unannounced, maybe having to sit around and wait, we now have an online scheduling system. So if somebody wants to come in and talk to a tax examiner about a particular issue, they can make an appointment and not have to wait and have their issues addressed. Another section is the cigarette and tobacco enforcement team. I got a brief description of that particular unit, and that is a particularly important unit because it ensures our compliance with the master settlement agreement with the tobacco companies. So again, very important. The next unit, revenue recovery, has been an interesting area to see how it has transitioned over time. When the, and revenue recovery, obviously, it is, as described, it's basically that section of the department where we work with taxpayers who are having difficulties meeting their tax obligations. So this area is the one that allows payment plans, waives penalty, those sorts of things to get payment. But what has been interesting over the course of the pandemic, when the pandemic started, I think we had within the Division of Taxation 6 employees who were capable from working remotely. So after the first emergency declaration was declared, we went from 6 employees to basically 75 to 80% of the Division of Taxation workforce being able to work remotely. And I'll be perfectly honest, I'm a very skeptical person when it comes to remote work. At least I was. But my opinion has changed, and I think the reason it's changed is because of this particular unit. Again, this particular unit, but basically that entire unit works remotely, and we have it such that we know when somebody is working, when they've logged in, what they're doing. We know the length of time that they're on a telephone call, and we know the accounts they're working, and more importantly, we know the results from those efforts real time. The production of this unit has increased substantially during the course of the pandemic in terms of record-setting performances for this unit. And again, this is from individuals who are working remotely. It's this ability to track production that convinced me that this might be something that could work. And obviously the results has proven that it can work. So as we find ourselves in a situation where we're trying to fill employment positions, employee flexibility has become a very important factor. And remote work in some capacity, and whether it's hybrid or working remotely all the time, I think it's got to be part of our lives, at least in the near future and maybe long term. But again, this particular unit has really emphasized to me how this can really work. And another aspect of this, because individuals can work remotely, they don't need to be in Topeka, Kansas, or in Overland Park at our office there, or in Wichita. They can be out in Southwest Kansas. And we have reached out and are hiring employees in Western Kansas to perform these very functions that individuals living in Topeka do. And again, with success. So having these types of positions out in Western Kansas where there may not be much variety in job availability, this gives individuals an option that they can pursue. The next area is the financial and document management. This is in-house, commonly referred to channel management. This is where all of the paper returns and payments come into the Department of Revenue. Now, it used to be located until last fall over on the second floor of the Docking State Office Building. This is one of those areas, and these employees are deemed essential employees and were basically on their job every single day during the pandemic. There was never any downtime. Obviously, when the money comes in to the state of Kansas, it can't sit around. And these are the folks who were there every day, and I can't say enough about their dedication. When you see other employees who might be working remotely, these folks were still in the office and performing very well. and I'll talk about this a little later, this is one of those areas where we felt the need to enhance the equipment and the software in this particular unit because it is so critical to the tax collection process. And the equipment and the software that was being used was really ending or getting near to the end of its useful life. So we embarked on a modernization effort, and we are in the process of finishing that particular effort this year. We have acquired the equipment, and this is equipment that is state-of-the-art in terms of optical imaging and remitting checks. I mean, when you have 30,000 checks that need to be remitted quickly, we have the technology now to do that. And the only remaining task that we're completing now is sort of the interface between that equipment and our tax operating systems. And that's very important because once that information is in our systems, individuals who might be working remotely can pull that information up and work an account that might need an adjustment. And by doing that, we are able to get refunds out very quickly. Last year, if somebody filed their individual income tax return electronically and asked for direct deposit, that refund was in their bank account within 7 days, 7 calendar days, which is very, very fast. And if they wanted a paper check, they still filed it electronically, but they wanted a paper check maybe 2 weeks. If they filed a paper return and wanted a paper check, it slows down the process, but it's still within a month. So those are very quick refund times for taxpayers who file electronically and seek that electronic deposit. And then at the bottom, business support services. Business support is very helpful in compiling a lot of the information that you see as legislators and you're going to see today in terms of extracting data from all of the files that we have, and allows you to look at fiscal notes and things of that nature. Financial services here, or business support services here, also are involved in the conversion of the data off a paper return into digital format, and they're very involved in that process. So again, we have a lot of experience in that area. And I'll touch on this in a moment or two, but I think perhaps one of the top concerns that I have at the department is the amount of expertise and knowledge that is going to be leaving the department over the next couple of years through retirements. There are a lot of individuals who have an incredible amount of experience who there isn't any tax situation they haven't run across. They're not going to be there anymore. So the effort has been to build up that next level so they can step up and fill those shoes. But those shoes are going to be very, very difficult to fill. And it's not going to happen overnight. You can hire somebody who might have all the credentials in the world, but they're not going to know the state tax effects of a reverse triangular merger. We have people who know that now. That's the sort of thing that is very difficult to deal with or to replace that type of knowledge. So let's move over to, again, on page 8 is the more information regarding individual income tax. And you can see how it had grown in 2021, again, in large part due to the tax extension. On page 9, you'll see some information that will be of interest to you as you consider individual income tax bills. And you can see how the various taxpayers are stratified by adjusted gross income. And if you look at the number of returns, you can see that when you add those first 3 rows up, over 60% of the returns that get filed with the state of Kansas have adjusted gross incomes of less than $70,000. And that percentage goes up to 73% when you look at the number of Kansas resident taxpayers who have less than $75,000. So hopefully will be helpful information to you as you consider bills and you're wondering, well, how many is this going to impact? This will give you perhaps some idea. And at the bottom of that page, it gives you some information regarding these various checkoffs on the tax returns. And you can see that the total of those checkoffs does not amount to a very significant number. So, moving over to page 10, the tables that are there give you the information filing status for the different taxpayers in the state and the numbers in those particular tax filing statuses. For example, as a resident taxpayer filing jointly for 2019, there were 513,000 who filed. And if you move over to the single taxpayers, you'll see nearly 600,000 filed in single status. You'll then find also the information for non-resident taxpayers. One of the things that I would note when we're talking about tax returns that get filed and how quickly we get refunds out and issues of that sort, keep in mind that, and I can't get into specifics, but our systems are set up with fraud edits. And during the course of any year, we will have returns that are put onto our work list to be examined because something on that return may have exceeded an acceptable tolerance. And so our individuals who are working these particular cases, who might be working from home, can again pull that information up, contact the taxpayer and get an explanation of why that return can then be processed and a refund issued. So I would note that for last year, we had, I believe, 16 tax preparers that we disqualified because of repeated irregularities with returns that may have been filed by those preparers. So we do take action when we see that there might be some abuse taking place. We believe that the number of fraudulent returns that were detected is under 500 for last year, at least at my last count. So, and again, I think just the way that our systems are designed, our operating systems, they do a very good job of putting suspicious returns onto work lists that are then worked manually by a tax examiner. And we might have as many as 40,000 returns going through that function at any given point in time. So if you look on page 11, this is the schedule showing the number of electronic returns that are filed. If you look at the top line, I think that's the total income tax returns filed, and then the bottom line is the returns that were filed electronically. Obviously, filing electronically is much, much more efficient, but we still get over 200,000 paper returns that come in, and the work that we're doing to modernize channel management, that's the area that gets those returns, and through its optical imaging technology gets all of that information into our operating systems that we can then process refunds if the return hasn't otherwise been rejected. So that's individual income tax. Let's move over to corporate income tax and privilege tax. Again, shows the corporate income tax receipts over the last several years. Again, keeping in mind that 2020 is maybe a little lower, 2021 is higher because of the tax extension that was granted. But if you look at, for example, 2016 through 2019, which was pre-pandemic, the average corporate tax receipt, and these are net amounts, was about $377 million. Now, I can tell you, and it's not reflected in this chart, but for the current tax year, or current fiscal year, the corporate receipts are coming in perhaps a little better than expected, and that's primarily as a result of estimated tax payments being made that are larger than expected. And so, you know, companies don't pay higher estimated tax payments unless they think their liability for the year is going to be meaningful. And that is the case for this year. Estimated tax payments are up. And as I recall, the estimate for 2022 is $600 million. And at this point in time, I think we are on track to meet that. The second quarter and third quarter of 2021, and this is based upon information coming from the Bureau of Economic Analysis of the U.S. Department of Commerce, the second and third quarters were the most profitable ever for corporations. Haven't seen the fourth quarter or 2021 as a whole, but we are seeing, again, increased receipts there from increased estimated tax payments tied to profitability. So moving over to page 13, we have the privilege tax on banks. Again, 20 and 21 reflect this extension for filing returns, which explains why 2021 might be somewhat higher. 2021 also might reflect income that might have come into the banks through their efforts to work on PPP loans and the fees associated with those. So there's those two reasons are probably the key reasons why receipts for 2021 were, what they were. So, yeah, when you look at 2021, it was 75 million. Again, if you look at the average of 2016 through 2019, the average is 43 million. So a significant bump, but again, in large part due to the extensions, moving income from one fiscal year to the next. On page 14, very interesting information in terms of corporate filers. At the top table shows that we had 32,000 corporate tax returns were filed, and 20,000 were non-taxable. There was no taxable income. If you look at that table, you will see that 5% of the corporations, and we're looking at, 500,000 and above, and $1 million and above. If you look at those, they constitute 5% of all of the corporations. So we have basically 5% of the corporations paying 95% of the corporate income tax to the state of Kansas. So it's very concentrated into a relatively small number of companies. And again, this is C corporations. This does not take into account flow-through entities like S corporations or partnerships or limited liability companies. And we have about 100,000 of those types of entities file with the state. They don't pay tax themselves. Their members and owners pay tax on their individual income tax returns. In terms of the bank tax liability on that same page, that middle schedule, kind of gives you the same sort of grouping. 98.5% of the liability is paid by roughly 60% of the companies. 270 banks pay 98% of the privilege tax. And for you who aren't familiar with this, banks don't pay income tax. You can't impose an income tax on banks because a lot of their income is derived from federal instruments. So you can't tax that as an income tax. That's why we have a privilege tax, which is measured by income, but it's not a tax on income. So let's move over to page 15, retailer sales and compensating use tax. You can see the table there, and when we look at these two taxes, we kind of look at them together in the aggregate. When the pandemic started and we thought that we might see an increase in compensating use tax for those individuals who might have shifted to online purchasing. So we would see an increase in compensating use tax and a decrease in sales tax. And again, compensating use tax is the tax that's imposed when you acquire property from out of state and use or consume it in the state of Kansas. And sales tax is imposed solely on transactions that occur within the state. But we thought there might be a drop in sales tax if there was an increase in compensating use tax, just shifting purchasing patterns by customers. That didn't prove to be the case. Sales tax continued to grow, and I think the growth from 2020, FY 2020 to 2021 was over 7%. The growth in compensating use tax was 25%. So pretty meaningful changes. I want to point out some developments that have occurred, and obviously I was in front of you before talking about Wayfair and its implementation and what it meant for the state of Kansas. But if you look at that table at the bottom of the page, and you look at the state use tax, for fiscal year 2017, it was $384 million. That was the last fiscal year pre-Wayfair. If you look at 2021, state use tax receipts was $602 million, so it had increased that much. Collections had increased, and again, this isn't a new tax. This is a tax that's always been there. But now it's being collected because Wayfair allowed that to occur. The estimate, the CRE estimate for this fiscal year for compensating use tax is $760 million, and receipts that have come in for the first 6 months of the year puts us on track to hit that $760 million. For fiscal year 2023, that amount bumps up to $820 million. So you've gone from basically $385 million to $820 million over that period of time. And again, it has nothing to do with anything more than the tax being collected and being remitted to the state. And part of that is due to just education of out-of-state retailers. You know, when I was here previously, we talked about the education effort the department had engaged in late 2019. And since we sent out the notice and worked with out-of-state retailers, we've had an additional 18,000 accounts with the department where these taxes are being collected on sales made into the state of Kansas. So that large increase is attributable to two factors. One is that there are more companies registered and remitting, and the other factor is just the fact that online purchasing is very popular and continues to grow. If you look over on page 16, again, this deals with the sales and use tax returns and how they're filed. The percentage of sales tax returns that are filed electronically is much higher. In fact, our state law requires it, but we still have a number of taxpayers or retailers who do not file electronically, and we continue to work with them. And again, the returns that they might file come into our channel management, and the returns are processed that way. But, you know, there are some retailers that just don't have the capability to do it, even though the statute may require it, but we continue to work with them. On pages 17 and 18, again, gives you some sales tax information, both for your county and on a per capita basis. If you are interested in seeing what your particular counties might be doing. Moving on a little quicker here, on page 19, motor fuel tax shows a decrease in 2020 and 2021. That coincides somewhat with the fact that fewer folks are out driving and burning motor fuel. And the legislature perhaps already is grappling with this issue, but the motor fuel tax as a funding mechanism for highways is going to have to be looked at very seriously, just because of the way that transportation is changing. And, you know, user fees, there will probably have to be other funding mechanisms considered as electric vehicles take over the market in the not too distant future. So on page 20, again, shows the gross mineral severance tax collections. Again, 2021 kind of shows the results and the impact of the pandemic in that market. This particular area is interesting. Back in '83, when this law came onto the books, actually I joined the department the first time back then. I was the first severance tax attorney, and the numbers associated with this were 3 or 4 times this number, and that was back in the mid-'80s. So the severance tax as a source of revenue has significantly declined. Turning over to page 21, food sales tax, income tax credit. Again, don't want to go into this in any detail. We'll just note the number of taxpayers that are taking advantage of this is roughly 70,000. And you will recall this change having occurred back in 2012. Back at that point in time, instead of a credit, there was an actual refund provided. Back then, you had roughly 400,000 claimants getting food sales tax refunds. So the usage has declined materially since this new scheme was put on the books back in 2013. On page 22 gives you some information again on the usage of the homestead property tax refunds. 68,000 for fiscal year 2021 for about 22 million. And I'm not going to get into any of that detail because I understand that Monday you're going to get a detailed briefing from Legislative Research on these particular homestead programs. And then finally, sort of an operations update, again, just kind of gives you some information involving our Division of Taxation, the percentage of electronic filers over the years, how many payments, what percentage of payments we get electronically. We still get a lot of paper checks that still come into the department. And then at the bottom gives you some information about the number of calls we deal with and how quickly they get responded to, and the correspondence that comes into the department, the thousands and thousands of letters, and business tax registrations, things of that nature. These are stats that we provide during the budget process to justify our existence. If you look over on page 24, calendar year 2021 operations, we processed 1.67 million individual income tax returns. We paid 883,000 individual income tax refunds, totaling 461 million. Approximately 90% of those returns filed electronically. Amazingly, no down days during the pandemic. I've talked about these other projects that we have undertaken, at least in terms of the channel management. Another project that we have undertaken, and we are concluding its implementation as well, our audit department has now put in a system that enables us to more efficiently do electronic audits, if you will. Instead of having our auditors go out and spend 2 weeks at a taxpayer's location bothering them, this data that the taxpayer has can be transmitted to us electronically. We have a warehouse, and again, it's very cost effective. We don't have travel costs, and it's a much more efficient system. So we are still learning really everything that we can do with this new software and this new platform that's been put in place. And again, the bottom line for 2021 is just the amazing results we've had with people working remotely. Again, I can't say enough for the production, setting production records during a pandemic to me was amazing. And again, it's in large part due to the managers there. You know, Steve Stotts, our Director of Taxation, Deidre Platt, who's in charge of our revenue recovery. I mean, it's their efforts that got everything in place to allow this to occur. So, calendar year 2021, the IRS turns on its system and will start accepting returns next Monday. That's when we can start receiving returns. So the refund process will begin then, and there will be days where we will do 30,000 refunds in a day for electronically filed returns. Our goals hopefully will still be able to be achieved in terms of getting refunds out within 7 days for electronically filed returns with direct deposit, 14 days for paper return or for a paper check, and then perhaps a month for a paper return and paper check. One of the things that we were careful to do is to make sure that our operating systems were functioning as they should after we deployed all of the legislative changes that occurred last session. And probably the biggest one is the expansion of the itemization provision. Prior to the enactment of Senate Bill 50, we would have perhaps 90,000 individuals filing itemized returns. We're expecting between 200 and 250,000 now in light of that. But our system has been changed to accommodate that, and which included the development of a new Schedule A, very similar to the IRS schedules, to capture that information for the deductions. And I guess we are, to the best of our ability at this point in time, trying to use a crystal ball and determine what the legislature might be doing this year for our design teams to address some of the issues that will be discussed. And when those bills pass and they need to be implemented immediately, we don't want to start planning then. We are planning now to cover those circumstances. That's all I have today, Mr. Chairman, just to give you, again, a sort of a brief picture of operations within our Division of Taxation and kind of where we stand with all of our major tax sources.
Thank you, Mr. Secretary, and you've packed a lot of information in less than an hour, and there's some really valuable data and trend lines that do help us tremendously in making our decisions. So I thank you for that. And I meant to thank you earlier for adjusting your schedule today and moving the presentation to today from yesterday. We do appreciate that.
I assure you, I'd rather be here than what I was going to be doing.
I won't ask details. Committee, are there any questions for the Secretary? Representative Highland.
Thank you, Mr. Chairman, and thank you again for coming to the committee. Appreciate it. You piqued my interest on your revenue recovery group. The amount being collected, is that going up or down? And can you tell us what percentage of the money owed is actually being collected?
The percentage collected is going up. And some of this is just, collecting delinquent debt is, I don't know if it's an art or a science, but the gist of it is you have to get on it quickly. And that's what we have done. We've dealt with people more quickly than has been the case in the past. And you're wondering, well, we've been in a pandemic. What's that all mean? Well, last year we even stopped collections for 3 months at the start of the pandemic. Folks were going through enough. We ceased all collection activities, and we really gave our staffs great flexibility in terms of working out pay plans and waiving penalties, things like that, to work with people and not take any egregious enforcement action. And for example, individuals who might have been unemployed, their files were just put into a suspense file, and they weren't, bothered at all. So even with those more flexible options, the fact that we were getting on things quicker when we did pursue delinquent taxpayers, we were able to collect more. In terms of percentages, I couldn't say. You may have a $5,000 issue, and there may be $1,000 of penalty. That if we can get payment of the tax and interest, then the penalties not become an issue, and it's kind of taken off the issue. Those are kind of the approaches we took.
I understand that, but are we getting maybe 90% of what we're owed, or what?
I'll have to check on that, Representative.
I'd appreciate it.
And
Thank you.
I think our business intelligence team maybe and our revenue recovery might be able to give a better insight, but really every case is kind of different.
Thank you very much. Thank you, Mr. Chairman.
Representative Bergkamp.
Thank you, Mr. Chair. Mark, thanks for your presentation. You guys obviously kind of have a complex job to go through all this year in and year out, and with all the changes that we make. So you have a lot of systems in place and you deal with a lot of confidential information, but it seems like you do it pretty efficiently. I was just curious if you guys ever talked to other departments, or I know like Department of Labor had a lot of issues with their processes, but to me it seems like you guys have pretty good standards for what you do. So I didn't know if there's any crosstalk between you and them about how things could be done more efficiently maybe over there.
We have communicated with the Department of Labor on certain issues over the past 2 years.
Okay. Yeah, I just wasn't sure because I know in business world, a lot of times you'll have groups that sometimes get very siloed and you don't have a lot of cross communication.
You know, there is, we work with a lot of different agencies. Mm-hmm. There's a lot of sharing of information and ideas.
Okay. No, thank you, Mark. Thank you.
Representative Epley.
Thank you, Mr. Chairman, and thanks for this report. It's a lot of data to kind of sink in here, and I just am always curious to know if there's any metrics by which you can look at other states like ourselves or know how we rank, or if you have anything by which you measure us. I mean, you're doing a good job, it looks like, for Kansas, but I'm just curious, do you secretaries get together and compare metrics and look at that, or can you comment about that?
We are participants in a number of national organizations. We belong to the Multi-State Tax Commission and the Federation of Tax Administrators, and we share a lot of information about programs between the states, and we picked up ideas from other states and vice versa. They've picked some up from us as well. So, but I'm not sure there's a measuring stick between the states necessarily.
Representative Schmidt.
Thank you, Mr. Chairman. Mr. Burghardt, I'm very impressed with the detail of this report. I've been following the PowerPoint you gave us. You mentioned, first of all, I'm also very pleased to hear your glowing comments about your employees, and particularly your IT employees. But you're also expressing concern about a lot of people close to retirement. Is there a training plan in place to acquaint new people with what you're going to be needing in the future?
Absolutely. There is, and when we're, again, we're trying to move that next level up to be the next generation's managers. So there is a lot of emphasis on education, and we want to extract as much as we can out of those folks who have so much experience. But again, it's not going to happen overnight. There is the process within the department and the complexities that we deal with are just, there's not something you can learn in a classroom.
Right.
Yeah.
Thank you.
And in terms of this report and its detail, Kathleen Smith is the one who is responsible for this report and all the information that has been put forth. Actually, a lot of these schedules are derived from the department's annual report on our website. And it's an 80-page report that goes into much more than taxation. It goes into the division of vehicles, PVD, and ABC.
Kathleen, you have our thanks for condensing the report.
My team, I have a great team that I work with.
Yes. Representative Helgerson.
Well, first, I'd like to pass on to all your employees what the great job they've done over the last year. Please pass that along. We appreciate it. You know, all their dedication. and what they've done to keep the state flowing and not only continuing, but bringing in all the extra revenue that you've brought in. Let me go back to the previous question. You said there is a staffing transition plan, and is that a document that's available for the legislators?
There is nothing in the nature of a document that's put in place, but we could
You haven't put a document
certainly
together?
codify that. I'm sorry?
You haven't put a document together on a transition plan for these employees, you know?
And there are so many units within the department. Each of those is looking at their own transition plan, and they may have employees in place already, but they're being moved into positions where they are going to be the leaders of the future, and how, you know, there is a fair amount of detail within those units. I'm not sure exactly how to capture all of that in a report, but we can certainly try to put something together.
I'm just surprised that there isn't a written document. I know the legislature quite often doesn't have a transition plan. We just have an election. But in your case, in any corporation your size, I would expect there'd be a lengthy transition plan talking about first how we can continue those employees working longer, you know, an extra year or 2 years that would be of great benefit. Second, you made a reference to docking. You miss it? The docking office building, you miss it?
Absolutely, I do. I'm a docking man. That's where I started.
When did the department move out? Was it last year, the last part of it?
2016, 17, 2016, 2017. And I think our final Department of Revenue employees in channel management moved out last September.
Okay. You know, what I'm really fascinated about the documents in the last few years is the corporate documents on, page 14, and the individual income tax that show exactly where the money's coming from and which bracket of population. You made the reference that 95% of the money comes from 5% of the corporations. And I think if you look at the personal income, I don't have it in front of me, you also find very similar statistics for the upper income Kansans paying the majority of Kansas taxes. What I'm asking is, when consensus made decisions about revenue that's coming in 20, 21, 22, there had to be charts made available to them, probably from the department, that would have indicated what you expected or what could be expected in growth or continuation of this, of those charts, and whether or not we expect the high income people to pay the majority of share of the high income corporations. The consensus made decisions that the revenue that we have made is not one-time money, but is ongoing money that is not COVID related. It's COVID related, but it's not going to go away. And I'm asking, can you provide those additional charts to us?
The department provides extensive information to the consensus estimating group. And perhaps Eddie can correct me if I'm wrong, but sort of what happens within that room and those individuals, that's really confidential. And correct me if I'm wrong, I'm not a longtime CRE participant, so I'll seek other advice.
Okay. I understand, but it would be helpful for us because the monumental decisions we're going to make this session, if we have more basis than what's been provided so far. I'll ask the final question, and I think some other legislators hinted at it or asked about it. I'm trying to judge whether or not we're efficient. And I looked at your performance measures, and the performance measures talk about one thing, but what I'm looking at is trying to find out cost of tax unit collected. For every tax return, how much does it cost us, and is that going up or down? Are we getting more efficient, or is it costing us more to perform the work? And in the transition, you've gone from other buildings and in other computer services and satellite, but I'm still trying to judge whether or not you're more efficient or less efficient, and how do we get that?
Well, let me give you a couple of examples. 3 years ago, our individual income tax returns and all of the checks were put into a box truck and delivered to another state to be processed. And obviously, that didn't appear to be the most appropriate way to deal with processing Kansas tax returns, and that was changed. A significant reduction in cost occurred by doing that. The budget that was submitted by the Department of Revenue and approved back in fiscal year 2019 was 15% higher than it is with the budget we just submitted. So there has been a decrease in costs, obviously, and again, production seems to be improving, and will continue to improve as best we can. These enhancements that we've made to our systems and channel management and the system that's been put in place for our audit bureau, there weren't special funds requested for those. Those were absorbed using our existing budgets. So yes, we are trying to be more efficient, accomplish more with less, and again, because of so much talent we have and experience within the department, we are able to accomplish that.
You just touched on something else, and that is it's a struggle for legislators to make decisions on if you're doing a good job with the money you're given. What you just said is helpful. Several years ago, there was a proposal that if we put more staffing in the Department of Revenue to go out and do the collections, that we'd see a higher return. I think that's what you're heading at. And I still haven't seen whether or not that brought money in. You brought. We need to see more of those details, that if we're going to put money in for more collections, and if that's a desired effect, how does it improve? If we move you out of docking to another office place, is your rent going up or going down? I struggle with that, you're probably the most important agency we have, and I want to make sure you have all the tools to do what you need, but it's hard getting a handle on whether or not you're efficient or if we need to do more or do less.
I understand, but every decision I make is based upon what's the bottom line, what's it mean, does this make us better? Yes, our move from the docking building and we moved out to the Zabel building saved us money. We're in a long-term lease out at the Zabel building, and we had the space there. Why not use it? And yeah, it was a good financial decision for the agency.
Representative Burghardt.
Thanks, Mr. Chair. Just a few quick ones. You mentioned, I think you're getting ready to lose maybe a lot of people going down the road. So I didn't know if you guys ever had in your minds, like if we didn't have to do this statutorily, or like recommendations you'd have for us to make things more efficient that we could do to speed up what you do, in the back of your mind, or if you had a list of some sort.
I have a personnel staff and a financial management staff that we would be happy to put some ideas together for you to help us along those lines. But yeah, hiring employees, it's an interesting process, and people say, well, just you've got to increase wages, and yeah, that's part of it. But again, job flexibility is coming back and being mentioned more and more and more. And that's just something we're going to have to deal with going forward. And I think agencies have that discretion now. You know, every agency's different. I mean, the Department of Corrections is entirely different how they operate than the Department of Revenue. But if we can have people working remotely, having the results that they have, you know, we have to look at that. It's just, again, it's, and who knows what the future has in store in terms of long-term remote work, but the fact is, we're paying a lot of money on leases, and we're in buildings that maybe the need is not there as much anymore for those spaces.
Good, thank you.
Thank you. Mr. Secretary, I just had a few quick questions. You've talked about your IT department and remote working and things like that. You also talked about the level of security. When you had to make that transition, and as you look at the future and what remote working looks like for the department in the future, do you have any security concerns? Are those employees taking home state equipment so you're guaranteed that it's secure? Are they working on their own home computers with state security in place? How does that work?
Yeah, these are state-owned pieces of equipment, and particularly in the area of taxation, our criteria, our security criteria to be able to do that has undergone tremendous review by the Internal Revenue Service. I mean, they are, you know, the sort of at the top in terms of being strict on confidentiality. And our systems that are with individuals at home meet all of those criteria. They're subject to audit. Yeah, we feel comfortable with our security. And again, being a tax attorney, I never in the world thought I'd have to sit around and listen to all of this terminology that most of it's over my head. But I have a lot of trust in our IT director, Andy Sandberg, and he's done an incredible job. And we have had no issues whatsoever with security breaches. And you wonder, you know, well, how serious can security be? On a daily basis, we have hundreds of thousands of blocked attempts to access our operating systems. And I'm not talking, you know, 200,000. Over the course of the year, we have millions and millions of blocked attempts. And again, it's because of the system we have in place and the security. And through D of A, the security protocols there, it's very strict, very strict.
Very good. One final question. I wanted to shift gears a little bit, talk about the compensating use growth. I know consensus revenue kind of looks into the out years a little bit. I'm not sure how far they look in their discussions. We obviously know what makes it onto the report, but do you see a plateau in the future? Do you see some continued growth? Can you comment on that?
I would see some continued growth, and I'm not sure I mentioned this in my testimony. You passed Senate Bill 50, which had the marketplace facilitator provision, okay? That took effect July 1, 2021. Trying to recall the fiscal note, 35 to 40 million was the fiscal note for the marketplace facilitator provision. For the first 6 months of the year, we are at 41 million with 6 months to go. So the fiscal note will be more in between 90 and 100 million than the 35 to 40. So yeah, there is continued growth. And how do I want to say this? It's continued growth, you know, from more sales perhaps, but it's also continued growth from a revenue perspective because we're just collecting it this time. You know, this is a tax that since 1967 had gone uncollected. Well, now Wayfair in Senate Bill 50 allows it to be collected.
And I'm safe to assume, if I remember correctly, local governments should see their sales tax rates increase too as it's broken out and distributed?
That is correct. There is an increase at the local level too, and for some reason, 20 million comes to mind, but I won't stick with that. But yes, we've had a corresponding increase at the local level as well.
Very good. Representative Baker.
Thank you, Mr. Chairman. Great lead-in on compensating use tax. That's been a big issue. But we put a $100,000 threshold on that. How much are we missing by not collecting that first $100,000 threshold?
We're thinking in the neighborhood of 10 million, but we can get that information to you. But that was my recollection when we were talking about this issue previously.
All right. Thank you very much. Thank you, Mr. Chairman.
Is that 10 million, is that something we can actually quantify, or is that just an estimate? Based on what we see coming in, do we know how many retailers are not submitting or that are under that threshold?
We can compile some pretty detailed information from our registrations and who's remitting.
Representative Gardner.
Thank you, Mr. Chairman. Along those same lines, thank you, Mr. Secretary, for being here, but talking about compensating use tax. And a number of us on this committee go back 2017, when did Wayfair, when all that bubbled up and it was being discussed throughout the nation on different states and the approaches they were taking to go after compensating use tax. And we sat here and talked about it, didn't pass anything, talked about it the next year, didn't pass anything. But here's where I'm headed with this. Kudos to you, Mr. Secretary, and your team, because you decided we have that ability based upon our law that was passed in, what, 1967? And I'm going to send out a notice, and I'm going to go after these folks and say, I don't care what's going on, this notice says you owe compensating use tax. And voila, the next year we had like $40 million. We went from zero, very few marketplace facilitators and others, and all of a sudden the list is now up to what, 18,000, did you say earlier? So I guess I'm going to button that all up thanks to you and your team taking that lead, because if I remember correctly, there was some concern from our AG that we were going to, that was not a good thing to do. We were hanging ourselves out there to be sued, if I remember correctly. And sometimes my memory does work pretty well. But look at the numbers, and if we wouldn't have done that, we're talking 100, I don't know what the projection would be, that we would have lost revenue, correct? So, back to my original point, kudos to you and the department. And one other thing I will say, I've been on this committee 6 years. In the last 3 to 4 years, when I call your department and talk to, I don't care if it's tax, if it's PVD, they are all always very professional and get back with me right away, and I appreciate that. So thank you.
Thank you for the comments. But in terms of the compensating use tax, much of the credit goes to the legislature, which starting back in 1990, put our statute in such a position that all the Department of Revenue needed was a case from the U.S. Supreme Court to implement the law that the legislature had put in place, anticipating a favorable decision. So some of you who were around back then, but again, during my prior term of duty at the department, I was heavily involved in that effort. But again, it's the fact that our law was structured properly to be able to be enforced. And I say enforced, what we did was nothing more than an education effort for out-of-state retailers, and compliance was very good.
Committee, any further questions? Seeing none, Mr. Secretary, I'd like to echo the ranking member's comments on complimenting your staff. I know working with Kathleen and her team, Director Harper and his team over at PVD, they do an excellent job getting good data back to us in a timely fashion, and it's greatly appreciated. I thank you for that.
I will share that with them.
Thank you. Committee, that concludes our business of the day. I haven't taken you past 5 o'clock yet, so I don't want to start that habit. Tomorrow's meeting has been canceled, so you are free for the week. We are adjourned.